I'm going to show you guys my simple trading model that I use every day. It's a simple two-step approach. The first step is to identify high time frame buyers, whether it's going bullish or bearish. And the second step is a series of requirements that I need in order for my execution to happen. So my first step is I need to determine the high time frame buyers. I need to know whether it's leaning towards bullish or bearish, right? My second step for my lower time frame entry model, I will look for ideally a lower time frame turtle soup, a lower time frame inverse fair value gap. I need to have opposing liquidity level, and also my risk to reward has to be at least 1 to 1. 1 to 1 is basically what I aim for because this one has a high win rate. It gives me about 70% win rate, which allows you to really compound really quickly. And it works for me because with me a high win rate, and for the price hitting my take profit, it actually increases my confidence as I go ahead, which improves my trading psychology. Okay, so I took a trade yesterday, which was the 20th of May. We can see the higher time frame is clearly quite bullish on the 1 hour time frame because I actually took a trade on the 19th of May as well. There was a short, but initially I'm just following the trend, right? You can see previously price took sell side liquidity here at 28,661, and price has been moving upwards since then, showing bullish momentum towards the upside. Okay, so that's on the 1 hour time frame. You can see as well on the 4 hour time frame, it's been trending up since March. So on the 1 hour time frame, we've established that the momentum is bullish, so we want to look for longs only. So for my lower time frame entry model, I will look for longs only. And my specific trading session that I use is I only trade the New York AM session, which is from 9:30 to 11. Some people enjoy trading the Asian session, the European session, which is London Open, or the New York PM session. But in this instance, I enjoy trading 9:30 to 11 because I've backtested my model and this suits me the best. So I'm going to stick to this session. So if I was to bring up my time zone kill zones indicator, you can see the blue one is Asia, the pink one is Europe, and the green one is New York. So you can see here 9:30 starts here. That's when the indicator starts and it ends around 11. So if we're just focusing on the 20th of May, we can see Asia session, it's been a bit choppy. The European session, it's leaning towards the upside, slowly targeting buy side liquidity there. And during New York session, there was a little bit of a pullback before a big push towards the upside. So if we want to establish a couple of high time frame bias PD arrays here, when I say PD arrays, I'm talking about things like fair value gap. You can see there was actually a 1 hour fair value gap that was put in here, a bullish 1 hour fair value gap. And this was what made me took the trade, because price actually came in, touched the 1 hour fair value gap and rejected it. Rejected, which I mean it respected the bullish fair value gap. So if we go down to the 15-minute time frame, we can see as well price has been choppy, so I didn't really execute my trade too early. I wanted price to give me a little bit of structure first, so I was actually monitoring this on the 5-minute and the 1-minute time frame. So if we put on my indicator again, you can see at 9:30 open here, price has been chopped around. It took out the buy side liquidity first and it came all the way down. Initially I was thinking whether I should have taken a trade here because price actually gave a 5-minute, let me just take that indicator away, a 5-minute fair value gap, but price wasn't clear enough in terms of market structure and there wasn't any displacement. Sometimes I would say most cases, I'll look for displacement. Displacement just means a quick reaction from the candle showing strength either towards the upside or the downside, right? So we can see here, the blue one is the 1 hour bullish fair value gap. So I avoided this because price was still choppy. So I annotated my liquidity levels, which is here. There's one here at 28,958 and there's another one here at 28,950. So these two are crucial levels. So basically you can see here at 10:10, price went in, dipped into this 1 hour fair value gap. Maybe I should just write something down there so it's easier for you guys to see. 1 hour fair value gap, and I will make it purple with the text at 14, so it's a little bit bigger. So take away this 5-minute bearish fair value. So price came down at 10:10, respected this 1 hour fair value gap, indicating that price is still looking to go up because our high time frame bias is bullish. Right, so after establishing that, I'm only looking for longs for my lower time frame entry model. Apart from that, it created two turtle soups here at 28,950 and 28,958, and I was actually looking to enter the 1 minute time frame. So now that we've established that price respected the 1 hour fair value gap, where can we see our entry model? Our entry model was really clear. So on the 1 minute time frame, we can see price swept sell side here, right? Was there a turtle soup? Yes. Was there a lower time frame inverse fair value gap? Yes, right? There was an inverse fair value gap here, 1 minute. A 1 minute inverse fair value gap that's here. Do we have opposing liquidity level? We do. Opposing liquidity level, it stands here at 29,129. An added bonus here is actually price actually put in a low resistance liquidity here. So what do we mean by low resistance liquidity? So points here like this, like here, here, and here, price engineered these levels in anticipation for it or for future to rate it all. So, you know, traders would have short positions, would put their stop loss above these levels, and that's where liquidity stands. These levels are primed to be rated, and so we know that price is going towards the upside. I executed my model here, which is here, and I took my full profit here. And was there a 1-to-1 risk to reward ratio? Definitely there was. So here, and I took my thing here. So yep, 1-to-1, and that was my execution yesterday. So just to recap, high time frame bias was bullish, so I'm only looking for longs for my lower time frame model. Was there a lower time frame turtle soup? Yes, here, right? There was one here. I mean, it has already rated the high time frame, so it adds even more confluence. So there was a TS here, lower time frame IFVG, not just here. There's one here. There's another one here as well that adds to the confluence. So price just, you know, blasted through these two IFVG like butter. And was there a opposing liquidity level? Yes. Was there a risk to reward of at least 1-to-1? Yes. So yeah, this was my trade yesterday. A really good A+ setup and a great example for me to share with you. So I hope you guys found this video helpful, and I'll catch you guys at the next one.